heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Ed Ludlow here in San Francisco. Caroline Hyde's off today. This is Bloomberg Technology. Coming up on the program, in Elon Musk's bid to make X an everything app, the company's changing its policies to expand data collection while offering an array of new features. We'll break down exactly what's changed overnight for the social media company. Plus, full earnings coverage ahead. We'll break down results from Salesforce, CrowdStrike, and Okta, where CEO Todd McKinnon will join us for an exclusive conversation. And the race for the first Bitcoin ETF. Who's going to win? We're going to discuss with one firm vying for that title. Bitwise CEO Matt Hogan joins us to weigh in. All right, to our top story and back to X. Planning to collect biometric data from users. So how are they getting it and just how will they use it? Let's break it all down with Bloomberg's Aisha Counts, who reported on the story overnight. Let's start with the new policy. What is it that you noticed X is doing differently in terms of which data is being collected?
Well, if you look at their policy, they added in this section about biometric data. Now, in actual policy, they don't go into what that means, but from what we've seen other companies do, we know that it means things like fingerprints or iris scans or facial images. And so they, based on your consent, will start collecting that data if you allow them to.
There's also, I think, jobs data, right?
There's jobs data.
And education as well. So you and I had the same question straight away, which was, how do they collect this biometric data? So I asked X, and this is what they told us. Mr. Director, if we can bring up their statement to us on the screen. Basically two ways. You have the option to issue them a government-issued ID and take a selfie as sort of a two-stage verification. What did you make of the process that they outlined?
You know, it sort of fits in line with what Musk has said, right? One of the things he talked about when he changed the whole verification process was like, there's too many bots and spam and fake accounts. And so if you think about it, being able to upload your government ID and then a picture is a much more robust verification process. Because up until now, all they really did was ask people to have a verified phone number and then a display photo, which, you know, you can sort of game that system a bit. So it falls in line with that.
And what they're saying to us in this statement is that, you know, impersonation is still an issue on the platform. There are a couple of Ed Ludlows floating around that are not me. They've since been taken down, but they think that it will deal with that. It wasn't the only piece of news. Musk kind of followed up afterwards to say there will be an offer of video and audio calling, but without having to submit a cell phone number. What was the new stuff there?
It's part of this whole idea of the everything app, right? He's been very vocal about, we want more video, we want more audio, like we want people to come to X and do everything. And so this seems like a play on that, and not having to use a phone number. You just get on it and you can sort of chat with people. We'll see what it looks like, but it falls in line with sort of his broader vision to make that everything app.
All right, Bloomberg's Aisha Counts dealing with what was some pretty late news last night, but it's had a big response. So let's keep the conversation going with Jennifer Greigel, Syracuse University Associate Professor of Communications. Jennifer, in the first instance, the specific data sets X is asking for, your reaction to that?
Well, special thanks to Asia and everybody, you know, reading the fine print and highlighting the things that are coming and being added, because that tells you something, right? And so, sure, there's the biometrics piece, and sure, he's clarified now that it's for, you know, validating that they are who they say they are for these authenticated accounts, right? But, you know, I think the fact that it's jobs, that it's education, right? Your job and your education tell you something, right? They tell you maybe your income, how they can influence you, but it's a demographic that provides, you know, targeted marketing, I would say. And that's one reason they're capturing that, maybe why that's a new thing.
X talks about the impact this will have in countering impersonators on the platform. I myself have had impersonation accounts of me pop up on the platform several times in recent months. Do you give them the benefit of the doubt that will be an effective way of countering that?
I think that's what they're hoping for, but again, bad actors can always get around things, right? But the more trust we then put into this authenticated identity, the more risk there might be introduced to. So I'm remembering back, to like when the AP account was hacked and had said that, something happened at the White House and then the stock market crashed, right? So I think once you put more trust in it too, it's problematic. I think what we've learned over the past year since Musk is that centralization is inherently risky, and that maybe it's not a good idea to have so many professionals and journalists and everyone tied into the space, which is controlled essentially by an individual now. It was a corporation before, but there were issues under Dorsey and when it was corporate too. So I don't know. I think that he's trying to solve for something, but the risks aren't necessarily new and they're not going away. But he is trying to get more people to stick around. And again, Twitter, X platform, whatever you want to call it now, it hasn't totally failed, right? So, but it has evolved. So I think we need to keep an eye on how it's changing, how he's trying to retain people and to maybe generate some revenue.
X, the platform formerly known as Twitter, is the line that we repeat daily on this show, Bloomberg Technology. Yeah. Jennifer, there are certainly some jurisdictional and legal questions that arise from this policy move. I note that if you go to the policy page, the biometric data in particular is, quote, based on your consent as a user, but it is personally identifying information, and therefore I ask about GDPR in Europe and what you think will happen in that region.
Yeah. And so I like how Musk is clarifying that this is for the premium users, but there are class actions here, even in the United States, about the capture of biometrics data in like the state of Illinois. That's where that's most relevant because they have some unique kind of legislation there. But it wasn't really transparent that this is what they were doing as a company. But, photo scans are pretty standard. We saw issues with Meta Facebook as well in the past. And when it comes to Europe, they have definitely more privacy initiatives over there. We're way behind here in the United States. But GDPR essentially is about consent, so it's nice to know when something, really personal is being collected, but also the ability to like opt out of things. I don't know. I feel like this free Twitter app, if you're a free user, you're paying more and more with things like not being able to consent to certain things being collected about you. And maybe some people are like, whatever, I don't care, scan my face, or I don't care, track where I go on the internet. But it's what happens to that data in aggregate, right? And then who does Musk and other corporate actors share this data with? And I particularly am interested in, how do they share data with governments? So not just, the United States, but also like Saudi Arabia, right? That is also an investor in Musk's enterprise. So, again, once that data is collected, these tools are created, the risks are essentially grow, sometimes without the public knowing. So I just want to raise some awareness around that too.
Jennifer, you raised the idea of the data being used in aggregate, and the other piece of news overnight is X offering video and audio call function without having to submit a cell phone number. Moving away from social media, your view on an everything app and the data relationship there.
It really is proving to be an everything app. He wants to collect everything on us, really. So the more data, the better. If they're making something like more squishy and loose, it's because they want you to contribute more. They're essentially lowering the barrier to entry, right? So I would say if you don't have to include a phone number, which again can be considered personal information, a lot more things are tied and validated through our cell phone numbers. So I would say that he wants to, maybe generate some more views and use of live streaming, the video apps, the voice, audio, and that can be collected too. So that's another biometric piece too, is your voice has a print to it as well. So, and I think we have to really just continue to keep a an eye on AI and how all of this data is being captured to train future models. So, again, the more voice that's submitted, the more that can be analyzed and used in the future, potentially even without our consent. So we just have to be careful, what we're contributing, and hopefully at some point we can get away from such centralized, spaces that are governed by, wealthy folks like Musk or corporations, because it becomes really a target of intervention of governments and state actors. And that's just going to get oppressive for the people down the road.
Jennifer Greigel, Syracuse University Associate Professor of Communications. Always great to have this discussion on Bloomberg Technology. The journey to a potential Bitcoin ETF has been a bumpy one, but some key decisions in the race are trickling in this week. And first up with Bitwise, the SEC expected to respond to its own filings, followed by BlackRock, Invesco, and others over the next 48 hours or so. Delighted to say we're joined by Bitwise CEO Matt Hogan. So let's start there. Have you heard anything from the SEC? Any updated communications or questions? Because my understanding is the deadline to respond to your ETF application is Friday.
That's exactly right. Thanks for having me on. The SEC has 45 days to initially respond to applications for novel ETFs like a spot Bitcoin ETF, and that window ends Friday for us. Historically, the SEC has extended their review. They can move those deadlines out by another 45 days, and that may happen. If I were an investor looking ahead, I'd circle October 16th as the next big deadline to watch. That's 45 more days after this weekend, and also 45 days after the grayscale ruling, which is the last day the SEC could appeal. So this week is momentous. October 16th may be a very good day to keep an eye on.
There's a question on how the SEC acts. Do they approve each application one by one, to your mind, or do they go by a common clock whereby they let everyone launch at once? What do you think?
Yeah, it's a great question. We don't know. If you look back at the history of the SEC's treatment of ETFs, you can see examples of each. And so we have no idea what their plans are. I will say, on behalf of investors, the best outcome is likely to line up multiple ETFs and allow them to launch at once. That'll create the most competition, the lowest prices, the best products, and be the fairest probably to the asset managers who have worked so hard over 10 years to get a spot Bitcoin ETF approved. So if we do get approval, that's what I'm hoping to see. But of course, anything could happen. We could see it in any which way.
We're showing Bitcoin's performance in the session off by 1.5%, but at around $27,000 per token. The point being, Matt, the sort of euphoria of the US appeals decision was short-lived. I thought that was supposed to be a starting gun or signal that this is great news for crypto.
Yeah, I think it is great news for crypto, right? Crypto is going from a niche asset to a mainstream asset. This was an important step along this journey. But my expectation is about what we're seeing today. I think people are likely to overestimate the short-term impact of an ETF and underestimate the long-term impact of an ETF. That's what we saw when gold ETFs were approved in 2003. That really transformed gold as an asset class, moved it into the mainstream. But it's not as if gold took off on the day it was approved. And I'd expect the same thing about Bitcoin. People want this to be a one-day story. It's fun to follow the race, but this is actually a 10-year story. This is about Bitcoin moving from the edge of the investment community to the center of the mainstream allocation space. That's really exciting. But if you're investing in that, you should be thinking about 10 years and not a few days.
When you say if you're investing, I wonder who you're referring to there, because the kind of two mainstay concerns of the SEC is the participation of retail investors, also the idea of market manipulation. Have you been active in sort of addressing those concerns with the regulator?
Yeah, absolutely. We've submitted over 400 pages of academic research demonstrating that the Bitcoin market of today is not the Bitcoin market of 5 or 10 years ago. This market has matured. I think it's matured to the space that we can have a Bitcoin ETF available. And the big point is investors are allocating to Bitcoin already. They're using consumer apps. They're using other tools. All an ETF would do is make it safer, cheaper, and provide more regulatory protections to help investors get better exposure to something that they're finding their way to get exposure to as well. I will say we started this journey on spot Bitcoin ETFs 10 years ago, and the SEC was right to deny Bitcoin ETFs at that point. The industry wasn't ready. The institutions weren't ready. The infrastructure wasn't ready. But I think today it is, and it's time for us to move forward.
How do you move forward and win? We just showed the calendar of everyone that could potentially have an ETF approved. It's quite a few of you. So how are you competitive against the large pack?
Yeah, Bitwise, crypto is all that we do. We've been doing this for 6 years. We work with thousands of financial advisors and tens of thousands of investors. We've helped them navigate the great parts of crypto and the challenges. I think some investors will want to turn towards large familiar asset managers like BlackRock, and others will want to turn to a crypto expert that they can call up and get answers from that are informed about what's going on in crypto. If you look at ETFs historically, specialist asset managers that focus on something 24/7, 365 win more than their fair share of assets. And that's what Bitwise is providing. We're the largest crypto index fund provider in America, and we want to take that expertise into this spot Bitcoin ETF market and serve investors that way.
Bitwise CIO Matt Hogan, just such a timely conversation. As it develops, come back and join us on Bloomberg Technology. Blow by blow.
Absolutely.
Thank you very much. Now, coming up here on the show, activist investors called on Salesforce to boost profits, and the company's making good on that bet. We'll recap the numbers from Mark Benioff's software empire coming up next. We're also looking at shares, by the way, of CrowdStrike, another earnings story, biggest intraday rise since May. The security software company issued forecast-beating second quarter earnings and a guidance upgrade, prompting, frankly, several analysts to raise their price targets on the stock, up 9% in the session. This is Bloomberg Technology. Time for Talking Tech. First up, we spoke a little bit yesterday about the release of Huawei's surprise smartphone. Now, Chinese state media is hailing the launch of the Mate 60 Pro as a victory in the ever so tense tech war against the United States. A number of Beijing-backed columns have run overnight praising Huawei since the device's release, which happened to coincide with Commerce Secretary Gina Raimondo's visit to China. Sticking with smartphones, Apple taking a greener approach to producing some of its upcoming smartwatches. Bloomberg reporting the company's trying out 3D printers to make the gadgets in order to use less slabs of metal. The new approach has the potential to streamline Apple's supply chain and be more eco-friendly. Apple declined to comment on the story. Plus, in an effort to fend off further antitrust scrutiny by the European Union, Microsoft is offering to unbundle its Teams video conferencing unit from its business software package in Europe. EU investigators are examining whether Microsoft breached competition rules by offering Teams with Office and Microsoft 365 in a package. This follows a complaint from Salesforce and its messaging platform Slack, which they made 3 years ago. Sticking with Salesforce, the company boosting investor confidence after posting strong second quarter earnings beat. Let's dissect the numbers with Bloomberg Intelligence senior tech analyst Anurag Rana. There was a lot that Salesforce did, to their credit, right? Raised prices for the first time in 7 years, July. They've cut headcount. What jumped out to you from that earnings print?
I think the bookings number, or what we look at called CRPO, grew about 11% in constant currency, and I think that was a surprise to a number of people, I would say, which is partially the reason why the stock is up. I think we were expecting that going in because we already heard from the likes of Microsoft and Amazon that there is some stabilization in the decline in tech spending. Yes. We weren't looking for a bad print, but I think the expectations were very negative going into the quarter.
AI. We just got to talk about it. We lean in on this idea that on a per user basis, Salesforce can charge $7,500 per user, right? Top line growth was 11% in the quarter gone, but this is a company that used to grow 20 to 30% top line. Does AI return them to that level of growth?
Oh, no. 20 to 30 is it's out of the question in my view. When you look at a company like Salesforce, given its size, given the end markets, this is a company that in our view should grow revenue somewhere between 10 and 15%. If you really, in good times, it'll be closer to the 13 to 15% mark. In bad times, it'll be around the 10% mark. The end markets or the software products that they're selling, they are close to, I would say, in line with the software industry, not so much in that 20% range anymore.
Anurag, I know you zeroed in on the fundamentals. You have better command of the numbers than anyone I know. But I want to ask about Mark Benioff. Investors made it clear what they wanted, and Mark Benioff did it, focused on profit.
You see, there's a lot more to go when it comes to profit, and Mark's done a good job about it. But I think, it's going to be a lot more than where we are right now. And the only reason is because they spend still a lot of money on sales and marketing compared to their rivals like Microsoft or Oracle. So we expect margins to go even higher over the next few years.
Yeah, they raised their operating margin guidance for the fiscal year by 2 percentage points. Anurag Rana, Senior Tech Analyst for Bloomberg Intelligence. Good to catch up. Thank you very much. Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco. This is what the technology sector looks like in your equity markets. NASDAQ 100 slightly higher. The story of the week is kind of in economic data and earnings, but remember we get jobs data Friday. That will inform what the Fed does and therefore the rates narrative and how we value many of these tech stocks, particularly on the NASDAQ 100. Elsewhere, slight outperformance for chip stocks. We're going to talk a bit later about Broadcom reporting after the bell, that dragging it higher. EV names pushing a little higher as well. Ford, General Motors up 0.9%, Tesla flat. Why? News that the United States is going to offer $12 billion of public money to retrofit plants that currently make combustion engine vehicles and transition them to plants that make electric vehicle offerings and platforms. Tesla not going to benefit from that because, of course, it's pure play. It doesn't need to convert any of its existing U.S. facilities. But it is a story that will continue to track those funds coming from the U.S. Department of Energy. Finally, in terms of what's driving us higher, modestly on the NASDAQ 100, it's the mega caps really that are doing well. Amazon is pushing higher. Broadcom, as we talked about, reports earnings after the bell, up 2.3%, pushing the Philadelphia Semiconductor Index higher to the upside. Apple actually lost some of its earlier gains in the session. Then Meta is actually one of the big points drivers to the upside on the social media side, up 0.8%. Right, our other top story. Let's turn back to the data policy changes at X, the platform formerly known as Twitter, planning to collect biometric data, job and school history. I do want to point out very quickly, though, that the company told me this morning this only applies to premium users who pay for an X subscription. Joining us now with reaction, Adam Kovacevic, Chamber of Progress founder and CEO. And let's start there. Your reaction to this policy change.
Well, I think sometimes when you see companies roll out these terms of service, they're a little bit of a roadmap of their plans. They may or may not come to fruition. They write them to give them sort of maximum flexibility. But I do think these are probably a bit of a X-ray into the product plans inside Elon Musk's head. And on the one hand, it shows that Musk, like a lot of leaders of the big companies, are sort of racing to compete and invade each other's product spaces and kind of everybody kind of wants to become the everything app. That's probably great for consumers and it creates more competition. On the other hand, Musk has frankly done a lot to destroy user trust in X over the last few months. So it's kind of far from clear that consumers are prepared to follow him on this expansion agenda.
I'd note that on my X timeline, at least, lots of users have responded to me saying, that they're not comfortable with this move, or they cannot believe that you have to pay for the privilege of handing over a wider set of data to X and Elon Musk. The company's position is that by having dual verification, a government-issued ID and then a selfie or picture as part of biometrics, and those biometrics come from your government-issued ID, that it will help them crack down on impersonators. This is what the company told me this morning in a statement. What do you make of that, Adam? The ability through this data to tackle impersonation?
Sure. Well, I think it really depends on why they're doing it. Do they need biometrics to become the next Venmo, or do they need it to solve a trust and verification problem that Musk himself created, right? Look, for payment services like Venmo, like Apple Pay, biometric data is very valuable for securing phones and transactions. And if that's why they're doing it, that's a level of security most people would welcome. But if they're doing this because they have a bot problem and a false impersonation problem, no one did more to create that problem than Elon Musk himself, right? He completely misunderstood the value of Twitter's old blue check value verification system and sort of auctioned it off as a source of revenue. That in turn meant that a lot of bots and trolls have bought blue checks now, and it's sort of diminished user trust in the platform. So after taking all those steps, it's a bit rich to say that they need biometrics to solve the problem. It's a little like saying, we need to install a top-of-the-line alarm system because, oops, we got rid of all of our doors and locks a few months back. It's maybe best to just focus on the basics first.
What's interesting with that position, Adam, is that the Chamber of Progress represents the industry, right? The technology companies. And I understand that your work is so that they could contribute in a better way to society. But give me your personal, your specific thoughts on a platform like X, including biometric data, jobs data, education data, albeit at will and only to paid subscribers?
Well, I think the reality is that, again, if they're doing this to inject more competition into the marketplace, for example, to compete with LinkedIn in job search or to compete with Venmo and payments or WhatsApp and messaging, all that is great. I think that it's a healthy dynamic that we have companies kind of almost having a degree of paranoia that leads them to compete with each other, particularly the big companies, well-resourced companies. That creates more options for consumers. All of that is really great. But on the other hand, the ability to do that does depend on trust. So I think, for example, a lot of people tried out Threads because they were dissatisfied with Twitter and all the changes going on there. But frankly, Meta had done a lot over the last several years to establish trust with its users, billion Instagram users, right? They had invested in things like content moderation. And so, I think it's great to see companies expand and compete with their rivals. That's beneficial for consumers, but it's only possible if you sort of have a baseline of trust that you've established with your core users to begin with.
This all comes down to the idea of an everything app, moving towards what we see in Southeast Asia and other parts of Asia where it's multifunction platform. The other piece of news overnight was the addition or the upcoming addition of video and audio calls without having to register a cell phone number. What do you make of that move towards the everything app?
Well, again, I think in some ways, a number of companies are trying to create the everything app. They'd all like to create the everything app, right? You see, TikTok getting into e-commerce to compete with Amazon. You see, again, both TikTok and Meta competing against Twitter in this sort of text-only posts. This audio-video calling, in some ways could be competing with WhatsApp and Facebook Messenger and iMessage, and that could be beneficial as well. So I think the quest for the everything app is a great one. It has to be done in a way that solves a problem for consumers. I think I think a lot of times for example, when I'm doing a DM conversation with people in Twitter, or used to be known as Twitter, I could see times where that would be beneficial to turn that into a call. On the other hand, if any one follower of another person on X is able to ring them out of the blue, that could be a recipe for
Yes.
spam calls. So it depends on how it's done, right? And he talked about X becoming a global address book, but Twitter is not a global address book for most people. Most people aren't even on
Yes.
Twitter, and there's a little bit of a gap here, I think, between how he uses it and how most people use it.
Adam, does X, the platform formerly known as Twitter, have an outsized societal impact relative to its size still?
Oh, absolutely. Always has. I mean, and trust me, I think that he he's done a lot to erode that. But, there's still a lot of real-time conversation happening there. Of course, Meta's trying to challenge that with Threads, and I think, has drawn a share of that conversation. But there's no question that there's still a lot happening on X. I still enjoy using it a lot of the time, and so I think that, I hope that it actually becomes a healthier place for a conversation, because that kind of trust and verification aspect of it is kind of essential to being a place that people want to hang out.
Yes. Adam Kubakovich, Chamber of Progress founder and CEO. Great to catch up. Thank you. Coming up here on Bloomberg Technology, we're going to talk AI, funding, and defense tech with Bilal Zuberi, partner at Lux Capital. Our VC Spotlight segment is coming up next. I have to say, that's a pretty old photo, Bilal. Check it out. You'll see what he looks like when he's on set next. This is Bloomberg Technology. AI startup Cohere is working with banks to raise a fresh round of financing just a few months after its last one. That, according to Bloomberg sources, the Toronto-based company, backed by investors like Oracle and Nvidia, is being advised by JP Morgan and Goldman Sachs on the potential round. The OpenAI competitor just raised $270 million in June. All right, let's stick with AI, startups, and venture money and get the VC perspective. On today's VC Spotlight, and bring in Bilal Zuberi, general partner at Lux Capital, a $5 billion firm that founds and funds emerging science and tech ventures pretty much all over the world. And that's why I'm happy to see you, because since last we spoke, you seem to have spent a lot of time on an airplane and visited a lot of countries. What have you been up to?
Oh, it's been a busy time in venture capital. I've been traveling around the world, visiting portfolio companies in Europe and Asia. We've been to several countries in Europe, went to Pakistan, went to Jordan, and then obviously all over the US. We have companies coast to coast.
Is there any sort of thematic divide of what you invest in Europe vis-a-vis what you've invested in here in the United States? Is there sort of a distinct pool of talent there?
Generally no. So as you said, we invest at the intersection of technology and sciences, solving hard problems, and frankly, matter that matters. While a lot of people in Silicon Valley might like to be thought leaders and think of themselves as visionaries, the reality is capital follows talent and talent follows interests. And the interest right now is in solving important, interesting problems. And that's where we're spending our time. So, a couple of areas that emerge, frankly, globally for us to invest in. It is securing life and environment. So it is companies like Saildrone that are working on climate change and, hurricane intensity and understanding weather patterns that affect globally, and defense and national security. It is advancing and promoting, our profitability and productivity. So companies like Applied Intuition building autonomous cars and enabling transition to electric vehicles globally. We're working on enabling free expression. Democracy is very important. So companies like Hugging Face that are sort of a global leader in the largest community of machine learning developers around the world, frankly, and the company's based in Europe, as you know, headquartered in Paris. And then...
we had Clem, the CEO, on the show. Was it this week or last week, guys? I think it was last week, but they've just raised money as well. And what was interesting there is that they're going to use it for the talent, because Correct. It's proving expensive. Just talk a little bit specifically about the Hugging Face investment.
I think, machine learning AI revolution is happening globally, and I think it's happening with people. So this is not something that requires significant amounts of capital and deployment into CapEx, into hardware systems. But what's really happening is people around the world are developing solutions using AI that previously was simply not available or just too expensive to develop. And that is happening everything from, fintech and traditional enterprise software all the way to solving healthcare problems and productivity and industrial solutions. So that's what Hugging Face is doing, is the largest community of machine learning developers and models literally all around the world. And the capital that they raise is to make sure that they invest in it.
Yeah, Clem DeLong on the show last week. The story for the firm this year has been that latest $1.15 billion fund for science, deep tech. In the time that was announced back in April, I think, have you literally just been writing checks? How does it work mechanically when a firm raises new funds? Can you just go out there and start deploying?
Technically, yes. We start deploying capital when we raise it from the LPs. We have obviously, this is our Fund 8. We have $5 billion under management. We've been deploying capital from previous funds as well. Our focus is going to continue to be to invest at the intersection of technology and sciences. And this could be physical sciences, everything from semiconductor chips to autonomy, automation, industrial automation. You saw the news about Apple using 3D printers, etc. It could be life sciences, reducing human suffering, developing new drugs and therapies. And it could be computer sciences, machine learning, AI, cybersecurity, and preparing for defense, frankly.
An umbrella area of interest to myself, my colleague Lizette Chapman, who's been writing about it, but also LPs, is defense. What do you see? Why is this now in vogue, for want of a better expression?
I don't know if it's in vogue. I think it's more importantly a realization that whether we like it or not, we are at some sort of a war. There is a war going on in Europe between Ukraine and Russia, and U.S. technologies from the private sector and the public sector have been very influential there. We are at odds with the CCP that have aggressive designs that is increasingly hostile towards the U.S. And the realization that the last 20 years of warfare were guerrilla warfare in the Middle East, going town to town, house to house. And now we're facing an extremely sophisticated enemy with digital tools, autonomous systems, AI-based solutions that are frankly pervasive in our lives and offensive from the CCP. They see that as a zero-sum game. So we have to prepare for that. We have to work for that. And I think the change that has happened is a realization that the old school way of working through 5-6 large primes and developing technologies just doesn't work. You have to work with the private sector to bring new technologies in. Whether it's drone systems or detection systems. Saildrone has hundreds of drones around the globe collecting data and analyzing data. This is what's needed for where the war is going. And hopefully we can actually reduce human suffering and reduce casualties in doing that, not putting humans in harm's way.
Bilal Zuberi, General Partner at Lux Capital. Great to have you on set in San Francisco. You've been around the world this year.
I mean, you have to just engineer things to operate within certain guardrails and boundaries, and you have to steer things in the right direction. So is the world suggesting that the whole world replaces human connection with a chatbot? If that is truly the case, I promise you we have bigger issues than Bumble. I don't think you will ever replace the need for real love and human connection.
That was Bumble's CEO and founder talking with Bloomberg's Emily Chang about how chatbots are no substitute for a real date. Take that from me. Now tune into that conversation tonight at 10 p.m. Eastern on Bloomberg Television and at 8 p.m. Eastern on Bloomberg Originals. Now, identity management company Okta out with earnings that beat expectations and announcing it's raised its full-year forecast. Joining us now for an exclusive conversation, Todd McKinnon, Okta CEO. Todd, it's so interesting to me, some of the size of the deals in the quarter gone and the impact that the size of those deals have had. Just explain the psychology and behavior of some of your customers and what they're willing to commit to.
Thanks for having me on Bloomberg Technology, Ed. It's great to be here. Large organizations particularly are really seeing the value of identity, whether it's a big company like NTT Data globally is using Okta to secure their workforce and allowing them to adopt different technologies and work from anywhere, or it's one of the biggest consumer packaged goods companies in the world that has disparate brands they're trying to bring a single unified login experience to. Identity is at the key to that, and these companies, despite macroeconomic uncertainty, are pushing forward with these strategic projects, and we're lucky enough to be able to work with them, and the results are reflected in our business.
CRPO, there are some analysts that kind of were a little disappointed. Your reaction to the bears?
Well, I think that we're being cautious about the economic outlook. There's still economic headwind in the technology sector, and we're being prudent about our forward guidance to make sure that we manage through that appropriately. But at the same time, our growth was very strong in the quarter, 23% revenue growth in this environment. And most importantly, we generated almost $50 million of free cash flow in the quarter. So we've proven that the market for identity is so attractive that in any economic environment, we can grow the business with profitability.
Net retention rate, I know it's something that our Bloomberg Intelligence analysts looked in. What's driving that in its kind of downward trajectory?
Well, it did tick down from last quarter, but remember, we have 115% net retention. So customers bought $1 a year ago. That same customer on average is now paying us $1.15. So that's an incredible testament to our customer success, and also the product innovation we've delivered. Just in the last few weeks, we've announced Okta for the Global 2000, which lets the largest organization in the world flexibly adjust their business strategy on a solid identity foundation as they adjust their strategy in these macroeconomic times. And another one is Okta Device Access, which secures the actual login at the end computer all the way through to the company's entire infrastructure. So the business is strong and customers are having success, and we're excited to work with them.
Todd, I think I heard you say AI on the call 8 times and ChatGPT 4 times. What's the AI story for Okta?
Well, first of all, in the big picture, Ed, I mean, our industry and the world hypes a lot of things. I think AI may be underhyped, and that's the potential. I mean, you have all the right ingredients of a true technology revolution. You have breakthrough hardware with what's happened with GPUs. You have computer science breakthroughs, which with what happened a few years ago with the Transformers paper and that pouring into large language models. And you have a killer app. You had ChatGPT come out and just take over the world, and that's the Netscape moment of this AI revolution. And talk about the economy. I think what really could get the economy in terms of tech spending and tech investment really doubling down is this focus on AI. Every company I talk to is thinking about how they can become an AI company, and it's just similar to like in the late 90s when every company had an internet strategy. That's what we're on the precipice of, and we benefit from that. Okta is the login for ChatGPT. They use our customer identity cloud to connect their customers to ChatGPT. And so it's whether it's OpenAI or whether it's Scale AI or Recurrency.ai, we're the identity company for all these AI startups and innovators.
And Okta shares off session highs, but still up 12%, on track for the best day since March on an intraday basis. Todd McKinnon, Okta CEO, thank you so much. Sadly, that does it for this edition of Bloomberg Technology, but don't forget, recap on our podcast. You can find it on the terminal as well as online, Apple, Spotify, and iHeart. From here in San Francisco, this is Bloomberg Technology.